Good morning. Welcome to Forex In Four. Today's Friday, October 28th, 2011. We're talking about perhaps we moved a little too far, a little too fast after yesterday's monster rally that brought the Dow Jones back above 12,000 for the first time in, oh God, 3-4 months, something like that. I'm just going to go to the 30-minute chart here. We're looking at the pound, but I want to start off with the euro. Where else will we start? All right, you can see euro surged overnight to above 142. We're pulling back just a little bit, but you can see 141 here is the daily pivot. We're sitting above that right now. There's a little bit of a risk-off mentality to start the morning, but it's probably more of a just blow-off top, as we call it, in the business, where there's, when you get a massive move like that, you get some profit taking, especially ahead of the weekend. The news out of the eurozone was encouraging, it was promising, it was, I'll even go so far as to say it was good, okay? But at the end of the day, we don't know exactly what's going to happen yet, so it's still kind of up in the air, right? So we talked yesterday about the resolution with the EFSF, the special purpose vehicle, the banks recapitalizing, the Greek bond haircuts, the austerity in Italy, and some of these other things. So those were all positives. But now it's going to be, okay, how does the market react to this? How do they manage it going forward? All right. And I mentioned yesterday that, while it was all a good, outcome, and that was about as well, let's put it this way, that was as little as everybody was expecting. They did the exact bare minimum. All right, we're going to have to see how the market reacts, and if these bond issues start, and if we get the contagion to the other countries. So people are just a little bit wary, but not overly. All right, so you can see euro made that nice move, pulled back. I mean, look at that, 138 on Thursday. Boom, 142. that's 4 cents. That's a monster move. Let's take a quick peek here at the pound. All right, you can see pound had a similar move, right? Chart looks just about the same. We've pulled back, but now actually we're sitting right up about here. Looks like maybe there's a little bit of resistance up here, say 161 and a quarter for the pound versus dollar. All right, there wasn't a ton of news happening, out this morning for Europe or anything like that. We did have some news out of Japan, and I want to take a look at this here because you can see here. All right, we're sitting up 75.65. That's a new all-time low that was put in yesterday. It looks like we're sort of middling around here. As long as we're under 76, this is a sort of a dangerous area. I don't want to say dangerous, but it's an area where people would previously thought that the Bank of Japan would perhaps try and intervene, and based on what they did at their rate policy meeting with this 5 trillion yen addition to their bond buying, that was essentially a drop in the bucket. That meant nothing. So we're going to have to see if the market tests Bank of Japan's. We'll see what they do. All right, but they had some news overnight in Japan. All right, they had CPI data that came in, which shows their continued deflationary signs over there. All right, and they also had industrial production, which came in way worse than expected. They were expecting about a minus 2.3%. They lost 4%. All right, actually CPI data came in, let's see here, it looked like it was flat. All right, so I guess maybe I shouldn't call it deflationary, but that's pretty much what we've been seeing in Japan. They also had their jobless rates figures, 4.1% jobless. All right, market was expecting 4.5%, so that's much better than expected. And household spending increased. All right, it was down 1.9%, but they were expecting it to be down 3.5%. So, economic stuff in Japan is the production's down, but they're rebuilding. They've got some massive government spending going on for the rebuilding of the problems that they have with the natural disasters and the tsunami, but that 4.1% jobless rate, hey, that's pretty good. So they've got pretty close to full employment over there, which is pretty awesome. So we're going to keep an eye on dollar pound. Let's just take a look at euro yen here. Quick second. And you can see, boom, massive move for euro yen yesterday, but we're pulling back just a little bit. And right now, it looks like euro's sitting up just above their daily pivots. All right, it actually looks like it's just coming out of oversold here a little bit on the 30-minute chart. So we could see perhaps another bounce, maybe put in a double top here, shy of 108 on euro yen. But later this morning, we're going to get some news here in the U.S. We're going to get personal income, personal spending. All right, those are important numbers because the personal spending has to do with the consumer. And if personal incomes rise, then that means it's more money people can spend. If personal spending is up, that means that consumers are consuming, which is going to be good for GDP. We saw GDP figures yesterday, 2.5% as expected. That's a pretty good number considering what we've seen. All right, and then we're also going to get consumer confidence from University of Michigan later this morning, which is expected to be higher than last month. But based on the most recent number that came in, I'm not sure what we're going to see out of that. So, yesterday was massive risk-taking, risk on. Let's look at the Aussie surged. I mean, just a massive move here, 103. The basic premise that I had come up with on Wednesday was that the European leaders were going to release this information during the market on I guess it was Wednesday, that they were going to release this information on Wednesday during the day, and then perhaps we'd see that pullback, and then boom, or we'd see the spike up rather, and then get the pullback. Well, it didn't happen that way. It was really we had the pullback because they delayed the meeting, and then we just got the spike up, and away it went. So I was hoping for more of a pullback to occur. I had about a I think it was 102.5 pullback here for Aussie, which didn't happen. But you can see Aussie big move up to 107. That's a 3-month high. We can go back and look at this on the 4-hour, and you can we had to go back and look at it on the daily for this. So, coming back up here to where that 110 area is, and a lot of it has to do with a dollar weakness. It's very interesting. But I want to show you this chart as we can look at oil here, and we know about the correlations in the market. But oil's back up to 92 and change. Sorry, a little bit got up to as high as just under 94. Okay, for a little bit of a pullback, but it's just an interesting phenomenon to think that all of a sudden the Europeans get their debt house in order and people are buying oil. Does it really change the economic dynamic that much? To be honest with you, no. What it really does is, if you think about what's going to happen in Europe, all right, they're probably looking at recession at this point, and if that happens, then you're going to see oil prices potentially come lower. So, this was really kind of a knee-jerk reaction out of the whole, boom, risk-on trade that occurred, and we could see it yesterday. And I just want to look at dollar CAD too. So I'll show you that, boom, we are right back under parity there with dollar CAD, and it looks like we could head back down. So it looks like the theme perhaps into the end of the year is going to be, continued dollar weakness, which means risk on trade, which means stocks higher. Okay, I'll show you S&P here real quick. You can consider that these markets have been flat for the majority of the year, and this month they've made up all their gains. I think market's up 12% for the month, so that's a pretty hefty move right there. And we could get back up to this 1350 level here in no time. So that's kind of what people I think are hoping for, and it's going to be risk on dollar weakness, which by proxy should push the euro a bit higher, even though the euro doesn't look so hot. So we're seeing money starting to move into all these other areas. Oil's a consequence of that happening, although the economic picture doesn't necessarily look that great. I'm interested to see what's going to happen with inflation going forward. Okay, because now that we have dollar weakness, you've got this commodity push, you have stock market going up, and listen, they've been hoping for inflation. I think the euro debt crisis has been sort of holding it back. All right, but it's questionable how fast they're going to be able to contain it if it flies. Because they are experiencing inflation in a lot of other parts of the globe, and of course, when inflation gets to a certain level, I mean, you want a little bit of inflation, but when it gets high enough to a certain level, then it becomes economic detriment, not a positive. So, I think Bernanke and his pals have their work cut out for him, and the constant overhang of the potential of QE3 maybe in Q1, is going to be something that could potentially swing that inflation higher. So it's kind of what we're looking at today. I'm not certain we're going to get a massive move up ahead of the weekend. People are still a little bit nervous about what's happened, over in Europe, and you just never know. I mean, you just want to make sure that it really is a done deal. Nothing's going to pop up. The market's flu. I don't think we'll see much more selling to take profits here, because it's going to be difficult to get back in, I think, at these levels. But you never know what happens. But at the end of the day, I don't think people are just loading up on risk either. So that's what I'm looking at for today, gang. Have a nice weekend and good trading to all.